Hey, welcome to today's technical analysis video. This is our daily stock trading series. My name is Eric Lewis, and today we're going to cover Tesla stock. This is November the 11th, 2019, although it's probably going to be early morning in November the 12th when this gets posted. So let's dive in. So first off, you have the 1-year chart. Tesla obviously had been having a bit of a rough year as far as the stock was concerned. And last week, or really it was 2 weeks ago, their earnings were expected to be negative, and they actually not only beat the loss that was expected per share, but actually had a gain, had positive earnings. And because of that, we see back here in late October, Tesla stock gapping higher from the high 250s all the way on up to $300 a share, and it's just been on a tear since then. So let's take a look at the moving averages, of course. And with a gap move like that, all the moving averages are going to be in order. This is definitely a bullish move on this stock. As you can see, the 10-day is higher than the 20-day, which is higher than the 50-day. So when you gap, let's see, $40, that happens. So let's take a look at the 5-year too, because it tends to give us a little bit better view of where the stock is and where it's been. So you can still see that strong green bar in late October. This is a weekly, not a daily chart now. But it just gives you an idea of how that one earnings report has sent Tesla back in a region where we might be retesting some highs. We'll see. And here, of course, are the moving averages. Now, on the 5-year, the 50 day or the 50 week, actually, that blue line is actually more because it's a 50 week, it's more of an annual average price. So we haven't passed that in the 10 week has passed it, the 20 week has not. If we continue higher, we will see these moving averages cross over fully, and could fully expect a bullish, more bullish patterns for the moving average, at least indicators, at least, not patterns. Now let's take a look at the Fibonacci analysis. When we have a stock that has pulled back and has retraced, I always like to see where it lies, because these Fibonacci numbers pop up time and time again. In fact, you can see back here in August, the 23.6% level became a bit of support. Also played in effect in late September. You can just see some of these averages really, or these percentages really play their hand. And we blew right through the 50% level. So as of recently, we are up above the 78.6% retracement of this last big move from late December 2018 through this past June. So I actually, when I see something like this, when you see momentum still building and maintaining after we've crossed the 78.6% return or retracement level, I tend to expect a full retracement of the previous move, which would have us testing in around $376.77. Now here's the MACD. Of course, no shock here when you have a gap move like that on a stock that was already trying to trend higher or starting to trend higher. It's no shock that we are above the zero line in the what would be considered the overbought territory. But these lines these two here, the short term and the slower exponential moving averages, don't seem to be slowing down. So I wouldn't put a whole lot of stock in this other than just saying it looks like continued bullish momentum. And then, of course, I wanted to point out a couple of resistance lines. And now that we're back in this $350 range, these levels may actually play a part in this. So you have that lower line, which is a $360, actually it's $359 area, where we saw that you see all these times, and July of 2018. You've got October of 18. I'm sorry, these are actually 17. You have early 2018. 3 different times we tested that resistance level. It obviously has been a place of selling consolidation, and we are only about $15 away from that region right now. So I would actually expect us to test it, and if we do blow past that, then start looking for the next one, which would be around the $386 range. I think this stock, if this momentum continues, and given the strength of the overall market, we could end up with new highs in Tesla. So Tesla stock overall has enjoyed a nice rally, especially after their strong earnings a couple of weeks ago in October. The moving averages on the 1-year chart are strongly bullish, and we looked at the 5-year, of course. The 50-week is still higher than the 20-week, so I think that'll straighten up here soon, and we'll have bullish indicators on both charts for the moving averages. Fibonacci analysis shows a 78.6 retracement of the last big move down, and we blew through that retracement level and could very well be headed towards a full retracement, a 100% retracement. The MACD, of course, is still showing bullish sentiment, and there is strong resistance up ahead near the $360 range and $386 per share range. Of course, that 360 range is still $15 from where we are, so that's still a nice move, almost a 5% move in this stock before we go testing that resistance level. So overall, I think Tesla looks great. I think it will continue to I think it's going to at least test this $360 level, and it could blow through to push to an all-time high. So keep an eye on Tesla. Unless there's some major reason, something happens to slow this momentum down. It looks strong. I wouldn't get in front of a moving freight train anytime soon. So if you're looking to trade it, I would trade on the bull rather than bearish sentiment. All right, that's it for today's video. Thank you guys so much for listening. Share it with a friend, and come on back for some more analysis tomorrow. All right, happy trading.